Everyone's telling you that it's a bad time to buy a home, and I'm going to debunk those myths and tell you exactly why it actually is. The first reason why many people believe that buying a home today isn't a great idea is because we're about to go into a recession or we're already in one. But if you look here at this chart, you'll see that 7 out of the last 8 recessions dating back to 1960, home prices have actually increased during a recession rather than decreased. Why do home prices increase during a recession? It's because interest rates go down when a recession happens. And right now, with interest rates at 23-year highs, with any decrease in interest rates, the interest of people buying a home, the people that want to buy a house, will be very interested in buying. So if we dip again, even with home prices increasing already this year, the amount of people that want to buy a house will increase significantly because the affordability starts to come back. The second reason why people are going to tell you not to buy a house today is because the home market is going to bust, and that is completely false. They say this because they look back at their most recent history and experience of 2007. But today's market is completely different than what it was back in 2007. Today's inventory is significantly lower at about 1 million homes on the market. And when the market busted back then, there was almost 5 million houses on the market. And why was that? There's 3 reasons for it. One was an over-speculation of housing by home builders. They were building houses left and right, speculating, selling them to investors, and it's because the mortgage guidelines were wide open. The banks were doing loans for ridiculous reasons, reference The Big Short. Like, there were just loans out there that they just thought were going to keep going and going, selling homes to investors with subpar credit scores and 100% financing, and it just couldn't sustain. And then the third reason is household formations dropped significantly, which I'll go into further. But if you look at the credit standards that have been established since 2008, everything is a qualified mortgage. So you have to prove income, you have to prove assets, and the ability to repay. And since then, the market has gained significant equity to where most home sellers, if not all, if they got in trouble, could sell their house and get out of it. So it's not going to happen again. Any doomsday teller that's telling you that, you need to give them these real examples of it. The third reason that everyone is giving today is that interest rates are too high. Yes, interest rates are at 23-year highs today. It does make homes less affordable. But what happens when interest rates go up like this, it gives opportunities to buyers that don't have the same amount of money to put down as some others. We saw this happen after rates were super low for the last 3 years in January to June of 22. The market got red hot. Everybody was freaked out that rates were going up, and they started jumping into the market and buying houses and paying well over list price for them. So it drove the prices of the homes up, but a lot of them weren't appraising, so they were having to pay money out of pocket in order to close on those houses. Well, after that stopped and rates went up enough to drive those people out of the market, it gave the opportunity to buyers that had little to no money down to buy. FHA, VA, USDA, getting seller credits, balancing the market back out to where it's more healthy. Yes, the payments are a little too high for some people, and it pauses them to take a look. But what you'll see when rates start to go down is that January of 22 scenario where it really pushes a lot more people back into the market to where they really want to buy again, and it will cause this frenzy one more time. So I've given you a lot of reasons why people are telling you not to buy houses today, and now I'm going to give you the data behind why I believe it is the right time for you to buy. If you look at this chart here, it's got the birth rate over the last 100 years, and you see how it peaks during the baby boomer era, and then it drops as it moves into 1973. What happened that was significant at that period of time was Roe versus Wade was passed, and the number of births went down significantly for the next decade. And then you see it rise again throughout the 80s and then peak into the millennials in the early 90s. And if you look back from today in the household formations, you see in 2004 and 5, right before the bust of '07, you see household formations drop significantly, which is 33 years after Roe versus Wade was passed. The typical home buyer buys a house at the age of 33 years old. Well, if you look at the reason why the number of births dropped during that period of time, and then they go back up, well, we're at the second largest peak of births since the baby boomers. We have the millennials that are now 33 years old, and there's an estimated 8 to 10 million people on the sidelines today that want to buy a house. They're in that stage of their life that they're ready to purchase, but they don't feel it's quite the right time, or it's just unaffordable to them. So if you have the means to purchase, the payment may be a little bit higher than what you want, but you have that opportunity to buy a house today, because as those 8 to 10 million people enter back into the market, as rates go down, it's going to make it way more competitive for you and anyone else that's waiting for that period of time. But if you buy today, you have that opportunity to negotiate. In a lot of cases, the sellers will help you with closing costs, or maybe a reduction in sales price. But if you wait too long and there's too many people offering on the same house, you're not going to have that opportunity. Now, it doesn't happen on every house, because there are buyers out there that are still willing to purchase. There's multiple offers still on some houses, but there are others that sit there for a few days or weeks, and it gives you that opportunity to make an offer that is more advantageous to you, or they're more willing to accept a 0 down or a 3.5% down loan that they may not accept in a different market. So stay out of that race with the 8 to 10 million people that are ready to buy, ready to pounce. Every 0.5% that rates go down, another million or two people enter back into the market. So if you think about that from a standpoint of affordability, if you buy today, say on a $350,000 home with rates in the 7 range, your payment's going to be at a same place it's going to be where rates are at 6%, and that home has appreciated to be $380 in a year from now. Because that's what's going to happen as the people come back in. It's going to push those values up again. So even though the rate's lower, the value's higher and the payment's the same. So you're in the same place you were today as you are in a year from now with a lower interest rate. There's a lot of sellers that are sitting on the sidelines waiting for rates to come down so that they can comfortably move as well. So there's a lot of constraint in inventory until the rates hit a certain point. So we're not going to see a flood of inventory. There's not a huge amount of foreclosures coming into the market. There's not a huge amount of defaults that are going to happen. It's simply a market that has to settle out. The home builders are still not building enough. They got slammed in 2007 and 8. And so they have not ever gone back to a speculation rate of that they did before. They're about 2 or 3 million units short of where they should be, and there's not enough labor and materials, and the cost of it's gone up so much that they can't get to a point where they're building enough homes. This is going to take several years to settle out. So if you're sitting on the sidelines waiting, just think about all those people in 2017 that said, hey, I'm not in the market today. I want to save X amount for my down payment, or the housing market's been booming for the last 8 or 9 years. I'm going to wait for it to settle out. Those homes from 2017 have gone up at least 50% in value, and in some places they've doubled in price. Housing will always increase on average at least 3% per year. So you have to look at your return on investment that you get from a leveraged asset like a home. If you're able to put 3 or 5% down to buy a house, it's not your 3 or 5% that's growing at 3% per year. It's your $300,000 house that's growing at 3% per year. Housing has increased 77 out of the last 85 years. 4 of those years were during the bust of 2007. So there's 3 other years of the last 85 years where housing has decreased, and it's a nominal number. It's 1% or 2%. And then the years following, it appreciates because people always need housing and they always have to have a place to live. Thank you for watching my video. Please subscribe, like, and if you have any questions, my information's right here. Please reach out. We'd love to help you.